Before we get into this video, I want to be upfront and honest with you. I'm buying every share of Tesla I can until the stock hits new all-time highs. I'll continue buying it after that, but really right now I want to load up on my positions. My average is way lower than where it is now, but the data that I am seeing, and I'm going to show you guys here in this video, is encouraging on a whole new level. So let's go ahead and get into it. Hit the like button and subscribe to the channel if you want to make more money and stay up to date with everything going on in the broader markets as well as Tesla stock every single day. Tesla's new inventory has basically fallen off of a cliff within the last week or so. Now, some people are going to look at this chart and instantly say this is negative because charts going down tend to be negative. But when it's related to inventory, it's massively positive. Tesla is spending $30,000+ to make every single electric vehicle. If they're not selling their inventory and their inventory is growing, that's extra money that they are not recouping. Now, I think the easiest way to understand how bullish this is to put it into a real life kind of comparison. If you are somebody that makes hats, that's your side hustle. You love making hats. Well, say you made 100 hats in a month. But you only sold 50. That's great. You still sold product. Awesome. Good for you. But you have 50 hats you paid money to make that you didn't sell. Let's say next month you made another 100 hats, but you sold 60. So you have 50 unsold from the last month. You have 40 now unsold for this month. You now have 90 hats worth of inventory. You spent money to make those 90 hats. Well, say the next month, you don't make any hats. You say, I'm going to take some time off. I'm going to sell the hats that I have already made, already spent money to make them. Well, that next month, you're not going to spend any more money to make these hats. You're going to sell the hats you already made. That's maximizing every single dollar you can. Then you're going to run your inventory down to basically zero, and you're going to be in a much better spot than if you continued to make more hats and build your inventory. That's the simplest way to look at it. So Tesla's inventory just dropped by the largest that you have seen in a long time. Now, there is some kind of trend to this. The end of every month, you tend to see inventory fall, and the beginning of a new month, you tend to see inventory increase. But this is obviously on a much bigger scale than what you typically see with Tesla. So I wanted to dive into this a little bit deeper because we know the Fremont factory did just shut down. So did Tesla sell through a little bit more inventory? Well, what I wanted to do is look at the Google Trends data. So Google Trends data is relative. So we just came off of record deliveries. So I'm not expecting the Google Trends to increase too much. I just don't want to see it fall, is essentially what I was looking for. Well, the complete opposite happened. The Model 3 and the Model Y are increasing, and they have been increasing since the end of Q2. Since the start of Q3 on July 1st, your data is higher than where it was with record deliveries in Q2. The average for Google Trends is 44 for the Model 3 and the Model Y. Today, you're at 63 for the Model Y, and for the Model 3, and for the Model Y, you're at 57. You have seen a sharp uptick within the last 2 or 3 weeks here, really the last 2-ish weeks, right about the time the Fremont factory was shutting down. So it does look like, indeed, Tesla probably did sell through quite a bit of inventory. And that's going to be a huge positive for Tesla's earnings. Something else that makes me quite bullish for Tesla's next earnings that analysts are not quite picking up on, which I find strange because Tesla is such a covered stock out there. There's a lot of people that have ratings on Tesla. But it's the news that we recently got on July 17th that Tesla directors will have to pay $735 million to settle claims they overpaid themselves. This money will go back to Tesla. It will be on Tesla's balance sheet, the next earnings, as net profits. Now, Tesla has 3.16 billion shares outstanding. That means this alone is going to add about 23 cents to Tesla's next upcoming earnings report for the EPS number. Current estimates for Tesla's earnings have actually fallen within the last month for Q3. 1 month ago, the estimate was 83 cents. Now analysts are expecting 80 cents. That doesn't make a whole lot of sense to me, and I think that sets us up for a massive next quarter. But I think what's most exciting is definitely the Cybertruck. Look at the Google Trends data for Cybertruck. It's at the highest level it's been at in, for sure, the last 12 months. This is the last 12-month chart, and you're, I guess you could say, substantially higher than where you have been at any time within the last year. Even if you look at the last 5 years, you're at the highest level now that you have been at since the literal day they announced the Cybertruck. Back here in 2019, in, what was that, November, December. The Cybertruck's coming. And this is something to be very excited about. Gary Black says the Cybertruck launch will rocket Tesla stock higher. Tesla's Cybertruck orders have recently exceeded 1.9 million, and people are signing up to wait 5 years for the Cybertruck. Elon recently said as well on the last earnings call that Cybertruck demand was off the hook so far that you can't even see the hook. That's pretty strong language coming from a guy like Elon. For comparison, Rivian would probably be your closest competitor to Tesla's Cybertruck, as well as the Ford F-150 Lightning. The Rivian has 114,000 pre-orders last we knew, and the Ford F-150 Lightning has 200,000 pre-orders. Tesla's Cybertruck is almost 10 times the Ford F-150 Lightning pre-orders, and over 20 times the Rivian pre-orders. I don't even care if half of these pre-orders from Tesla were false and phony and baloney. You're still outselling the competition by massive margins. But the Cybertruck does one thing that these other trucks simply don't do. The Cybertruck is unrivaled in terms of its looks. It just looks so off the walls that you're not going to help but to stare at this thing when you see it. And that's free advertisement. And I think Elon did that for exactly that purpose. But not even to mention that, the actual specs of the vehicle are impressive. Just on the Tesla website, it says better utility than a truck with more performance than a sports car. How could you not like this thing? The Cybertruck will also be the first sub 19 feet truck that has both 4 doors and a 6-foot plus bed. That's what Elon said on the Q2 2023 earnings call. If true, this would mean that both the Ford F-150 Lightning with its 5.5-foot bed and the Rivian R1T with its 4.5-foot long bed will be one-upped by the Angular zero emissions pickup truck. But I think really the thing that is most exciting for all of us that are investors in Tesla, that want to see Tesla do well to make money alongside Tesla, the Cybertruck's not going to cannibalize Tesla's other products. The Model 3 is your car, right? Your Model Y was your SUV, and now you have the truck. But what specifically happened when the Model Y was introduced May 13th of 2020, ironically, when the markets were hitting the lows during the COVID crash? Well, deliveries jumped over 80% from 2020 to 2021. In 2020, Tesla delivered 499,550 vehicles. In 2021, Tesla delivered 936,172 vehicles. And this was because the introduction of the Model Y. This would not have happened without the Model Y. Well, now you're going to see deliveries jump, I think, more than your analysts expect they will. Just having the Cybertruck out on the road is advertising. If people don't buy a Cybertruck, it's going to lead to more conversions for the Model 3 and the Model Y. Now, what's great about right now is one, the markets are not expecting that. Your average analyst is not expecting the Cybertruck to grow the Model 3's business or the Model Y's business, but it's also where we are in the markets as far as the rate cycle. See, Tesla stock had a high in 2021, and the business has grown a lot since then. I think that's fair to say. There's no argument there. The business has grown quite a bit. But the only difference today is that interest rates are so much higher, so you can't put as high of a valuation on Tesla as you once could. Today's analysts call 74 times PE expensive. Back in 2021, well, a lot of people love Tesla with 1100 for a PE ratio. It's all about the rates and all about relative expensiveness, if that's even a word. Because nobody wants to pay for Tesla at 1,000 times P when rates are 5%. Well, it looks like we're not going to get another rate hike from the Fed. And that, in turn, makes for the soft landing narrative to become a lot greater of an actual possibility. Let me tell you right now, the auto sector does not do well during a recession. That's a big reason why Tesla has not done well in the last 2 years relative to its all-time high, relative to other big tech names that are well above their all-time highs. Think Microsoft, think Apple, think Nvidia, think these big tech names. Well, it's because Tesla is uniquely in the one sector that does the worst during a recession, and everyone's been screaming a recession for almost 2 years now. It doesn't look like that recession's coming. And at that point, there's going to be a drastic realization that Tesla has improved quite a bit in the last 2 years, and now you're actually getting the stock at a major discount. According to Yahoo Finance, Tesla is significantly undervalued. They are using the GF value method. Now, the GF value is a unique measure of a stock's intrinsic value, calculated based on 3 key factors: historical trading multiples, a guru focus adjustment factor related to the past performance and growth, and future business performance estimates. The GF value line on our summary page offers an overview of the stock's ideal fair trading value. At its current price of $265.64 per share and a market cap of $843.1 billion, Tesla appears to be significantly undervalued according to the GF value calculation. This suggests that the long-term return of Tesla stock is likely to be much higher than its business growth. So this calculation says Tesla stock today should be $448.91 per share, which, ironically enough, I think that's actually where the stock should be as well. I don't find it reasonable that Apple and Microsoft, with negative year-over-year growth and arguably less bright prospects than Tesla going ahead, is trading at all-time highs and almost record high valuations that we have seen in recent times. And Tesla is far from that. It's one of the most hated stocks in the markets. I think this is actually quite logical. Tesla's cash-to-debt ratio of 3.97 outperforms 81.27% of companies in the vehicles and parts industry, indicating strong financial health. Tesla, with revenues of $94 billion and an EPS of $3.53 in the past 12 months, has been profitable for 3 out of the past 10 years. Its operating margin of 13.49% is better than 88.05% of companies in the vehicles and parts industry, indicating fair profitability. Company growth is a crucial factor in valuation. Faster growing companies, especially those with profitable growth, create more value for shareholders. Tesla's 3-year average annual revenue growth is 36.4%, outperforming 93.69% of companies in the vehicles and parts industry. Its 3-year average EBITDA growth rate is 83.9%, ranking better than 97.36% of industry peers, indicating strong growth. This is something that I have been saying for a long time now. If you look at Tesla simply on a PE basis, which is what investors like to value companies off of the most, well, that's only taking in the price of Tesla stock compared to the EPS number. And people do this for Apple and Microsoft. That's why Apple's at almost a 35 times P, Microsoft's almost at a 40, Tesla's at a 75, and they say that Tesla's more expensive. Well, when you factor in the growth, which you should if you're a growth investor, Tesla is actually 3 to 4 times cheaper than Apple and Microsoft. That's because Tesla's growing their EBITDA at 80+% within the last 3 years, and Microsoft and Apple aren't even coming close to that. Yahoo Finance says, in conclusion, Tesla's stock appears to be significantly undervalued. The company's financial condition is strong, its profitability is fair, and its growth ranks better than 97.36% of companies in the vehicle and parts industry. What we also seen on Friday was Tesla stock rallied almost 4.5%, including after hours. Now, I'm not willing to bet that we're just going to keep rallying. Anything can happen in the short term. I hope the stock falls so I can continue to buy shares at cheaper and cheaper prices. But the days are counting down to when the first Cybertruck deliveries will be made. And on that day, once the markets realize the Cybertruck is a brand new segment of Tesla's business and deliveries are likely to grow faster than 50% as long as production can keep up with it. That's why I've been so encouraged with the latest expansion plans that we have got from Tesla. Then Tesla stock is going to absolutely soar. Even if demand outweighs production, having an order backlog is a really good problem to have compared to not having any orders to begin with. So I really just think the days of Tesla stock being under all-time highs are getting quite limited here. I could be wrong. All hell could break loose in the economy. If that was the case, this would be a much different video. Again, autos, financing does not do well during a recession. But really what we've seen this week from the economic data, what we really got today and Thursday, or Friday and Thursday, was good personal spending, showing the economy is strong, personal income falling, really defeating the argument of a wage price spiral, but still in really good territory, still outpacing inflation on a month-over-month basis, and core PCE falling to 0.2%, really in line with the Fed's 2% inflation target. Initial jobless claims were bullish. Michigan Consumer Sentiment Survey was bullish. Real estate data this past week has been bullish. The Fed was bullish. I just don't see the case for the recession right now. Towards the end of this year, I think with student loan repayments starting up, we could be in for maybe a little bit of a problem. The average student loan repayment payment is $300 to $400 for anyone with student loans. That could be a problem. But right now, I just don't see this slowdown. A soft landing is looking more likely. And at that point, the fears that have dominated Tesla stock within the last 2 years are going to slowly subside. And again, the day Tesla delivers the first Cybertruck, you want to be fully invested in Tesla. That's not to mention full self-driving or potentially licensing full self-driving. Elon Musk said the V12 version of full self-driving is no longer going to be a beta. That is going to be full self-driving. Like hands off the wheel, submit it to the government for approval. Full self-driving is another major catalyst, but I'm not going to bet on that right now. I'm going to bet on what we know. And what we know, demand is very strong, as you see from the Google Trends data. Tesla looks like they're reducing their inventory, and the Cybertruck is coming within the next month or so. Next 2 or 3 months, probably at the latest. These are things I want to be invested in Tesla for. So that is going to go ahead and conclude this video. I really want to know what you guys think about all of this information down below in the comment section. What are you looking forward to with Tesla? What are you kind of nervous about with Tesla? You can recession. Hit me with your recession thoughts as well. I think that's the biggest potential problem that Tesla could see, is just an overall deteriorating economy. It could also be one of the biggest benefits. Seriously, let me know down below in the comment section, what do you think about this video? As well as that, if you made it to the end of the video, well, you might as well subscribe to the channel so you can stay up to date with future videos that hopefully help to make you money. If you want to take it a step further and come trade with me live in real time, see every single time I buy shares of Tesla or any other stock in my long-term portfolio, as well as trading account, we trade options, crypto, futures, all of it when the times are right. Well, link down below in the description of this video for that one as well. Thank you for watching. Most importantly, enjoy the rest of your weekends, and I will see you in the next one.